Attunga Capital is an investment management business that has a focus on alternative assets. We currently have funds that are involved in the power and emissions markets in Australia, and we also trade in agricultural markets and metals markets, and we have a new idea in weather markets as well that's planned. Of most relevance tonight is obviously power and emissions, given that these are the markets in Australia that are most relevant to pricing carbon, and most relevant to probably everyone in this room in relation to how electricity prices over time are going to impact everyone. Like Generation Investment Management and like Climate Change Capital, our funds are involved in investment management, as I said, but rather than invest in companies and rather than invest in projects, we tend to invest or trade in the instruments that surround the products that we're involved in. So in relation to power, we're involved in electricity, and in relation to emissions, we trade the whole raft of products around carbon, around renewable energy certificates, around New South Wales greenhouse gas abatement certificates, and all the other acronyms that we also trade. These markets are obviously very early stage. They're emerging. They've been traded in Australia for many years, but the thing that they suffer from is regulatory uncertainty. And that's the single biggest factor that really has put problems in greening investments in Australia, and in particular in the power and emissions markets. The perverse situation that we're left with is companies won't invest when there's no certainty. That lack of investment is causing there to be a narrowing of supply and demand in the power markets, and that narrowing of supply and demand is forcing prices up. And compound with that the fact that an emissions trading scheme of whatever description is ultimately employed, it's going to further raise prices. So the simple corollary of that is that the longer we wait, the more it's going to cost us. And the more obvious it's going to be. One of the questions that I've been posed with this evening is the greening investment in Australia solely reliant upon carbon pricing? And I think it's exceptionally important, but I don't think it's the only aspect. We've already heard from James. He's mentioned that they're investing in property markets. We've heard from David as well that sustainability more generally is another area of greening investment. But in relation to the business that we're involved in power and emissions, there's no question that a pricing of carbon is critical. One of the reasons Nick asked me to come up here is also to provide a number of provocative questions to James and David, so I thought I'd pitch those, and ultimately they'll be answered, I guess, in Q&A. But firstly, to James, given your passion for these markets and given the fact that you're half Australian, I'm intrigued to know why you haven't got a business presence in Australia and why you're not actively involved here.
Ask that, yeah.
And then in relation to David, what I'm particularly interested in is, given the global nature of the sustainability business that he runs, I'm interested to know how Australian corporates and Australian equities in particular fit within that in a global context.
I'm not sure whether I'm here solely as the Chief Executive of Grattan Institute. I may also be here because my last role was as Managing Director for E-Trade Australia, the online stockbroker for ANZ. So maybe I'm here because I'm the one of us four who may now escape the draft. But I guess one of the questions that came to me as I was listening to what we heard before was a consistent theme that came through, which was we hope that we can make money by doing the right thing. And what struck me about that was we're going to struggle to make money running a solar thermal plant or a geothermal plant or a wind farm or anything else without some form of carbon pricing. Bottom line is that making electricity out of coal is really, really, really cheap. Indeed, I think Victoria has amongst the cheapest electricity in the world because it's very cheap to make electricity from brown coal. So I guess question one is, for both of our speakers, do you see a carbon price as essential if you are indeed going to make money doing the right thing? And I guess secondly, and a slight variation on that question, is investors prefer to have as little uncertainty as possible, and indeed they demand a higher rate of return if the uncertainty is higher. And a question therefore as to whether, as we bring in that carbon pricing scheme, is there a virtue from an investment perspective in deliberately trying to set a floor price for carbon? So whether you do that in the most straightforward way in terms of simply having a tax as opposed to a cap and trade scheme, or whether you have it in a more sophisticated way in which you have a floor price and potentially even a collar price as well, within which carbon can trade, but you will always pay, say, at least $20 a tonne for carbon. Would that be a good piece of design? Would that lead to more sustainable investing than otherwise? So that's my second question. And my third question is perhaps a little more removed. One of the things that the discipline of economics has had to say over the last 20 years, although mainly it's been borrowing from psychologists, has been that we don't have great instincts. Our instincts are to act for the short term. If you put a child in a room and tell it and give it a marshmallow in front of it and say that if it doesn't eat the marshmallow in the next 5 minutes, it can have 2 marshmallows, on average about 2/3 of the children will eat the first marshmallow, before you get back inside. So our very base instincts are to be short term. Our base instincts are to avoid loss. We prefer to keep what we have rather than to get something new. Our base instincts are to avoid risk. Our base instincts are to avoid complexity. And all of those things make a lot of sense if you're in the business of hunting gazelles and looking for yams and avoiding lions on the plains of northern Africa. They're actually hardwired into our brains. And the kinds of things that you're asking us to do are to go against all of those instincts. And that's tough. So I was wondering, I guess, why is it that you think that we might be able to overcome those instincts? And then I guess even more seriously, how is it that we expect governments to overcome those instincts? Because if we as individuals are prone to short-termism and loss avoidance and risk avoidance and complexity avoidance, the average government is certainly prone to loss avoidance and short-termism and risk avoidance, although they do actually seem to be pretty good at complexity. So I guess one of the final question I had for you is, what do you think we can do that makes it more likely that we as individuals, either as investors or as voters or as people involved in governments, can avoid those instincts that are hardwired into our brains?
I'd like both David and James to respond to the contributions from Ian and from John. And maybe, James, if you could go first.
Well, they're fantastic questions, and I'd really like to get into the details of them. I'll do my very best to get to the point. I think having a carbon price is essential for an economy such as this one, but pretty much for every developed economy. I think that a carbon price is essential, but it's not the only strategy that is likely to make the transformation effective in the time frame that we have available to us. There is no doubt that it's possible to combine a traded price, the kind of price that your business, Ian, would work with and around and attach to the power price, for example, with a floor price that provides more relative certainty to a long-term investor. And we should be very clear here that the investment community talks about wanting certainty, but actually wouldn't make investments for high returns if they ever got it. So risk-taking and investment go together, and risk-taking happens in situations of uncertainty every day all around the world, and we don't need certainty in order to invest. But we do need more stable frameworks for deployment of large amounts of capital in the transformation. And we do need some intervention that looks a bit like sovereign power to do that. So there is a fundamental role for government in enabling that money to move in order to deliver the public interest. So the philosophical issue that you threw at us, which goes to the sort of essence of this discussion, how do we deal with our baser instincts? Well, the answer is that's what civilization is. And civilization is in part dependent upon the institutions and legal systems that we construct in order to enable us as a society to appeal to our best instincts, and frankly in order to protect ourselves from ourselves. So law at its most ideal is a will to perfection. Right? And international law at its most extreme form, which if ever we approach it, it would be wonderful, is the will to perfection of the whole human race. And what we're dealing with here is a challenge to our capacity to make law in our long-term interests, which are ultimately survival and prospering. You're going to get a lecture from Tim Jackson in a day that is about reimagining the prosperity, what prosperity means. Well, just as we have instincts, fight or flight instincts to deal with immediate risk, we are going to have to learn how to deal with systemic risk approaching slowly from afar. We don't have them hardwired. We're going to have to learn them and build institutions that enable us to respond as a society to the very real threat that we face. That kind of institution building requires very large levels of cooperation and political will organization, lawmaking, and then around that, the deployment of the financial resources to achieve that end. Now, buried but not very deep below the surface in all of your questions is how on earth are we going to do this cooperatively soon enough when nations have also learned behaviors that are competitive, self-interested, and short-term, at least in political cycles. Ironically, we've got a challenge to our own democratic systems here, is that sometimes non-democratic governments have better long-term planning prospects than ours. So you look at what China is doing today, with all of the things that we might think are negative about the Chinese political economy, they are planning to deal with this issue over the long term. They're taking scientific evidence in at the top, a scientifically literate elite, and they are distributing it throughout a massive economy, knowing that they are going to have to turn that huge system around in order to deal with these massive threats in water, resource depletion, and climate change. We could learn from that, but we're going to have to do it within a Western democratic model. And the best proxy we have for that today is building market instruments like cap and trade, is using the full panoply of regulatory instruments. If you know how to prevent the harm, regulate it. If you know what the price should be, tax it. If you don't know either, but you want to send a message out into the marketplace, or all this audience as a whole, then float a market price and see what comes towards it.
James, we've got a liberalised economy, we've got an educated workforce, we're global in our outlook, we have established legal system, we're called Australia, and climate change capital is not here.
Yes,
Ian's question was...
Ian's question, I'm so sorry, but it's kind of implicit in my answer, which is the policy framework is not here. Australia has not done what it should have done, which is to create the conditions in which a business called Climate Change Capital could establish a business here. I want my former colleagues to be in a business with me here, right? But she's come home because she wants to come home for good reason. But the conditions for investment are not here for a business like ours. They could be. I hope very soon they will be. There's no reason why they shouldn't, actually. The arguments against are so poor, the arguments against are so weak, it amazes me that they have got hold of the political classes. The fragility in the reasoning, I cannot believe they've not been tested adequately by those who really know either the nature of the problem or what the opportunities look like in the transformation. But they are very similar to what happens in all systems where there is a dominant economic elite that has no interest in making the change. And the only way around that is through politics. And so far, that change has not taken place.
Thank you, James. Ian, do you want to quickly come back, and then I'm going to go to David?
Yeah, I was actually going to give you a lead-in to David, because I suspect that the answer to David will be that Australia has plenty of companies that are sustainably at the leading edge. So it's kind of ironic that we've got the corporates that are actually probably, subject to what David says, up there with the best of them in the world, and yet the government's or the political agenda is not as secure.
David.
That must be to me. Well, in terms of I'll get to Australia sort of at the end. I think it's probably important to set the context of how we think about market timeframes. And they're really, in the context of finance, there are sort of two segments. There's trading markets, and that's provision of liquidity. Unfortunately, sometimes long-term investors get caught up into trading markets, and it's important. And then it's fundamental investing. Investing can be in private equity, it can be in debt, it can be in real estate, it can be in infrastructure, it can be in public or private equities. In reality, when you look at corporate finance and actually how businesses operate and the value of businesses' results, which are their cash flows, you will make better investment decisions if you evaluate those decisions over a long period of time. So for those investors who are trading, you can be successful as a trader, but you have to recognize that you're not inherently taking advantage of the long-term value of a business. And what we've been trying to do from the very beginning is to say trading and liquidity is interesting and important, but in reality, value creation, wealth creation, economic value creation for all of us as economists and participants in economies, it's better to do that on a long-term basis. Now, the advantage that we have had at Generation is that, unfortunately, through either technology or mindset or values or media or otherwise, many investors have lost that message. But the very best investors actually haven't. Warren Buffett from forever has recognized that long-term investing is best practice. So our greatest strategic advantage as an investor is that we have clients, many of whom are Australian as inside, who have given us the time frame to make these investments. But you're right to raise the question that intuitively it's surprising to me that people keep migrating to the short term when in reality that is actually not where the value of businesses are. And conversely, there are terrific Australian businesses. In our investment management universe, we have 100 companies that we're looking at around the world. We're constantly looking at both smaller Australian businesses as well as some larger Australian businesses. We have one Australian business actually in the portfolio today, and there's no reason to think that Australian businesses can't be world leaders, particularly in climate change-oriented businesses.
Thank you very much, David. In listening to the discourse up here, I was actually reminded of Prasad yesterday at the end of his comments in relation to energy in the session that we had here with regard to energy futures, and he quoted Mahatma Gandhi, and I can't remember the exact quote, but he was actually talking, the point was that we're all waiting for license to do things from somewhere else. And that license, of course, matters a great deal, but equally that doesn't mean there aren't a whole lot of things that can be done. And I'm going to go to a question here from Dan Cass, because Dan, I would bet, is a theatre goer. Because when Melbourne has been lucky enough to have Ian McKellen in Waiting for Godot over the last few weeks. And the question that Dan has is, while we wait for international agreement for a global carbon regime, what are the best ways that nations can implement strong local carbon taxes with trade protection to prevent capital flight? And how can nations decarbonise while waiting for Godot?
Brilliant. Brilliant
I
question.
think that question best goes to John first.
Thank you. Well, thank you, Dan. I guess it goes to one of the report that you mentioned, Nick, that Grattan Institute released a couple of weeks ago, And exactly what we did was ask what would be the impact on the Australian economy if Australia, as it were, went it alone, although I guess it would be a lot more accurate to say, started to catch up with a few other people and hopefully, stay just in front of the laggards would be the most accurate description. But what would be the impact? And the answer we came to was as follows. There would obviously be an impact. The whole point of carbon pricing is that you change the structure of the economy. That is the idea. You stop doing some things that you are currently doing. But what we tried to do was put that in context, and in context in terms of inflationary outcomes, it's less than the impact of the GST. In terms of the number of jobs affected, our estimate was that about 11,000 jobs will probably be directly affected. To put that in context, the electricity market reforms that Australia has gone through over the last 2 decades have taken something like 135,000 jobs out of the electricity sector. The changes to the tariff barriers that we've had over the last 2 or 3 decades have taken something like 100,000 jobs, and those people are now doing something different from what they were doing 2 or 3 decades ago. So we've been through far bigger changes than the kind of changes we're talking about if we implement a carbon price over the next decade or so. So number one, it's relatively small. And number two, when you actually look at which industries will be really badly affected, because a lot of the debate has been about whether there'd be leakage, whether if Australia goes alone, that will result in a large amount of jobs and industries moving offshore. What we found was, given the actual place of individual Australian industries on the cost curves internationally, a large number of Australian industries, such as alumina and so on, would in fact remain very competitive even if they were paying a carbon price of $35. There were a couple of Australian industries, and aluminium and the oil refining industry in particular, which would probably be in severe trouble. But on the other hand, if they moved their production offshore, that would almost certainly result in lower carbon emissions on average. I go back to where I started. That is actually the point of carbon pricing. That's what we're trying to do. And then finally, there are a couple of industries, particularly in terms of steel and cement, which probably would be adversely affected and severely so, and where moving offshore would not obviously reduce carbon emissions. And for those industries, there was a real case for specific border adjustments. So rather than handing out vast numbers of free permits, you get a much better result. You create much stronger incentives to restructure the economy and reduce carbon emissions. If you essentially levy a charge on imports that's equivalent to the charge that you're levying on local production. And that would be the conclusion, whether you go for carbon pricing via a tax or via cap and trade, the same kind of principles apply. So our conclusion was carbon pricing for Australia, going it alone, is, in the overall scheme of things, not that big a deal, and relative to some of the quite profound shifts that we've seen in the Australian economy over the last 2 or 3 decades, a quite manageable change.
Thank you very much, John. I probably won't go to the rest of the panel unless there is someone with their finger aloft, and I will go to you. Do you want? No, you just have your finger aloft, not wanting to indicate anything to me. You have a finger.
I do.
You have a finger aloft, wanting to speak. James.
Great question, great answer. Easy to endorse. Let me just add a couple of elements to it. When this work was done in the UK and more widely in Europe, the choice of a cap and trade system was done on the basis that it was the most economically efficient way of dealing with the problem. Right? So it was not an option not to deal with the problem. Okay? Then after that, there's been some experience also about what not to do. So there's been some learning, but at least we started, and we do have a price signal, and it does affect decision-making, most particularly in the power sector. We also, with the base economic study, you probably heard 100 times that Nick Stern did, he attributed no value, because he couldn't really guess at the number, for the economic advantage that would come through the efficiency and through the technological innovation and through the job creation that might come in the transformation. He simply said the cost, if it were merely a cost, was affordable. Some studies have recently done, most particularly by the German government, that has attempted to attribute an additional value from having made the change. So now we have a debate about the investment return to an economy that comes from making it more efficient at the use of fossil fuels. They're taking some of the cost associated with a highly volatile commodity market. The ability to be able to plan longer term if you have more stable operational costs. You might have high capital costs. In fact, many of the technologies that we think are going to work best to make our economy a lower carbon economy do have high capital costs, but they have very low operating costs. This might make managing an economy a lot easier and less costly than managing highly fluctuating commodity prices. So far, we're just beginning the argument that there might be a gain to our economy over the right time frame from making the investments in a lower carbon economy. One further point, I didn't fully answer your question earlier about the relationship between, say, a floor price and a floating price. I would commend to you, just as an example, the program for government that the new coalition government in the UK has put out. It's interesting from lots of point of view. It was done under pressure in order to get power, right? It's pretty elemental, right? And pressure to get power produced an agreement on some fundamentals, including a big section on climate change and energy and environment. That program, to be implemented of course, but that program contains a number of interesting commitments to do something that I think could be done in an Australian political context, bearing in mind this is a conservative government with a liberal coalition. And one of the things they've opted for is to combine a market price for carbon with a floor price for carbon. And a commitment to keep that price, don't know what it is yet, at a level that will help the transformation to a low carbon economy and will deliver a previous government's commitment to establish a budget for carbon for the whole economy. So here you have raw politics, all about power, but also about some continuity with the long-term interest of the nation to transform it from high to low carbon.
Thank you, James. Just one more question from a piece of paper, and then I'd like to go to the microphone, so if people want to make their way there. I'm sorry that those that have gone had to stand for a while. But I suppose, going back to when I left Australia to go and work in Whitehall, if people were talking about greening capitalism, the grand example always cited was the work of Lord Brown at BP in terms of their internal emissions trading system within the business. A lot of rebranding, quite effective rebranding, a lot of investment in solar at the same time. And that was a long time, it seems a long time ago, it's not that long ago, but this is a question from one of the world's leading energy economists who we're lucky enough to have here in this forum, who works at one of the most highly regarded tertiary institutions in the world. But it is not of a technical nature. This question is really quite straightforward. So not so many years ago, BP was regarded as a leading practitioner of sustainable capitalism. What went wrong? Was it all greenwash? Or are the fates being cruel again? David, do you want to have a go?
Well, I think, and we've studied this question for a number of years, actually, and we have great admiration for Lord Brown. We believe fundamentally that his intentions were true and honorable, and I think he wanted to move his company, the British Petroleum Company, to a beyond petroleum and alternative energy type of business. I think it's also fair to say that he may have misjudged his ability to manage a very large organization, and he did not have, in hindsight, and we are now seeing it in a horrible way in Louisiana, the full support of his U.S. businesses. And in fact, British Petroleum is the amalgamation of a number of different companies in the United States, and he did not was not able to, they were not able to instill the low-carbon economy culture and mantra within those teams. And in fact, over time, a long time ago, we were invested in British Petroleum. We sold out because we recognized after a series of health and safety issues, a series of trading scandals within commodities, and actually major sort of environmental sort of weaknesses or even shortcuts, I'm trying to think of a better word, in Alaska and Prudhoe Bay, that they did not have the same culture and the same commitment to a low carbon or beyond carbon company. So the long and the short of it is what's happening now in Louisiana and off the Gulf of Mexico is not really a surprise to us, because ultimately what you have to think about in businesses is it is about culture. It is about the values and ethics and governance of those organizations. And you can have a CEO who is well-intended, who is saying that this is what we ought to do, but if they do not have incentive structures, cultures, or governance to support that strategy, it will not happen. And vice versa, if you have people bottoms up, but do not have leadership that is supportive of a strategy or a philosophy or culture, it won't happen either. You need both. And in the case of British Petroleum, we sadly believe that they do not have the buy-in from the broader company.
James, very quickly.
I have a personal take on this now, because the non-executive chair of our business is Vivienne Cox, a woman, who left British Petroleum after she ran its alternative energy business, in part because it was starved of investment. And when Tony Hayward took over from Lord Brown, he committed the company to a petroleum strategy. And I have to tell you, he was celebrated by the investment community. On the whole, they applauded. The first thing he said at the first investor gathering was that too many people in this business have been talking about saving the world. We're going to go and get some resources. So he was a champion of that strategy. I don't think that the company really gave the alternatives a chance. And it's one of the reasons why I'm skeptical about the answers emerging from inside energy companies. But I do believe that Lord Brown did intend there to be a genuine competition between the strategies. So theoretically, you can open up internally a competition between alternatives and petroleum. You could do that. In this instance, it has not ultimately happened. And it's a shame. But, you know, the renewable energy industry actually needs to work with big players. So it might be, ironically, that BP comes around again and discovers that they actually do need to rebuild the value of their brand by paying more attention to the alternatives. And that might provide an opportunity for some new collaborations.
Thank you, James. We've got about 15 minutes left. To the floor, can I go to the front first? And the rules are, anybody who's been to one of these lectures previously will know them. I want a question, I don't want a statement, and I want the question to be pertinent to what we've just heard and preferably directed to somebody on the panel. And your name?
Peter Cuffey. I'm Artistic Director of Nouveau Avant-Garde Rendezvous. In inverse response to John's perhaps quasi-Darwinian ideological critique earlier, I want to put it to you that we as a civil society really have a perfectly legitimate right to mandatorily require our politicians and public servants to implement an eco-modernisation project across the board, across public transport, which is an essential service.
Sounding like a statement. Question?
I'd question you as to why it wouldn't be possible to implement a complete eco-modernisation of all essential public infrastructure, particularly our educational facilities, that kind of thing, in case of a climate change crisis. Thank you.
Thanks, Peter. John, do you quickly want to respond to that?
Thank you. Well, I should also reveal that my my past life before I was running E-Trade was I was a constitutional lawyer. So I do actually believe that we can actually make a difference to these things. And I think one of the really interesting illustrations of that is Jared Diamond's quite astonishing book, Collapse, in which he talks about the way that societies often exhaust their resources. It's not something that Professor Diamond really talks about a lot in the book, but there are some societies that have avoided doing that. And what makes a difference is ultimately their politics, the quality of their politics, the quality of their legal systems, as James was saying. And ultimately that's about saying, look, it's a responsibility of voters, it's a responsibility of civil society, it's a responsibility of people to talk to each other and say, inevitably, what we're trying to do is balance interests. We're trying to balance both economic growth as well as doing it sustainably. And we have to put pressure on our politicians, on our leaders, to do what we want through the ballot box, and ultimately that, unfortunately as it is, worse than all the other systems apart from all the ones that exist.
Yeah.
So that's the way that we have to do it. It's ultimately about raw politics, and that is ultimately the only hope that we have.
Thanks very much for that. Now I'm going to do something which is probably a little bit dangerous, in that I know that the gentleman with the grey hair by that microphone asked a question earlier today, and I know that the gentleman here with the blue T-shirt asked a question yesterday. You are perfectly at liberty to ask a question. However, I would say that in the interests of fairness, might either of you consider stepping back and allowing either the woman in the red or indeed the man there carrying the pen and the white paper to move forward and ask a question first, seeing as you've already made contributions to the Deakin Lecture Series. Well, he's a friend. Well,
he's done a
there
trade.
You go. The man with the blue top.
Thank you. My name's Ian Blair. I'm a sustainability consultant, and I've got a question for James and John, and it's building on your idea of, firstly, hardwired instincts, and secondly, James, on women. And the fact is that women make most of the decisions on purchase. They are the best educated. And what I'm wondering is whether, instead of Costello's have one for the country, of having a carbon payment to all women, providing they manage the home and the bed to ensure a good carbon outcome.
Is that a question or is it a statement? Do we want responses? We might just let that hang in the air. Are you happy with that? Yeah, we'll let that hang in the air. And we go back to our friend in the blue T-shirt. Man in blue T-shirt, are you going to ask a question, or are you going to step back and let the woman with the red top ask a question, because she hasn't yet?
We didn't let the fossil fuel industry step back last night and chose the future of energy to be a fossil fuel speaker.
So the answer to the question is no, you are going to ask a question.
Yeah, I am, but
is
hopefully
right?
it'll be quick and she'll get a go as well.
That's fine with me. As long as we're clear, you're going to ask a question, you will not step back.
Okay. Yeah. Okay, so I just want to know, it's interesting around the discussion around, everyone says we need a carbon price, but in Germany they abated in 2007-08 54 million tonnes through the feed-in tariff for the Renewable Energy Sources Act, but the ETS, the European ETS that Germany was operating, only abated 8 million tonnes. Now that's solar PV, for instance. The cost reduction that they've actually achieved by bringing the price down for all people in all nations worldwide is now going to help everybody, because it's going to help India. So what I want to say is why... I'm ready for it.
Yep, question.
Why do you guys always say, oh, we need a carbon price, which tends to lend to go a quick shift to crappy gas, which kills people, instead of going for something direct that brings the cost of renewable energy down for the whole world, which is what Germany's achieved?
Got it.
Okay, so we want a German system with a feed-in tariff.
It's achieved cost reduction.
So the question is, do we need the German system?
Well, why just ideologically claim we only need a carbon price? That's as the only way, when it's proven that the best outcome has been so far
James,
from
you got
renewable
it?
energy sources.
Yeah, got it. Go for it.
I had it ages ago.
Good.
No ideological commitment to carbon price instead of a feed-in tariff. On the contrary, our business operates several funds in different markets, And we're very happy to use and work off feed-in tariffs. It's by far the best way of channeling scale capital into renewable energy infrastructure. There are questions about maintaining the cost of the support, which are currently causing real difficulties in Spain, but you can easily design a system where it fades away over time. There's no reason why you can't have a system that begins with a feed-in tariff and then goes to a floating incentive. So you won't get from me ever a kind of one-eyed commitment to carbon pricing as if it solves everything, but I do think, as I said before in my presentation, it's very useful for sending out into an economy a signal and picking up innovation and business leadership. You've got to be careful of what you said about the abatement from carbon pricing in Germany, because most of the contracts for emission reductions are long-term contracts and they come in over time. So you don't know yet what the overall abatement from the investment made because of the obligation to reduce is going to look like. If I just give you some sense of it, we have one of our funds is focused on emission reductions. It's about $1 billion, although we've invested a bit more than that along with others. It's got years to run, at least another 4 or 5 before we'll know. But I would be disappointed if that single fund didn't deliver in the order of 100 million tons of emission reductions. Right? I would find that, I would be grumpy with my colleagues if we didn't pull that off. Right? So that's from a price signal sent some time ago, and I can't tell you whether that's true or not yet. But you should be careful about making that straight comparison. And all I'd say to you is it's not either or, but both and.
What about the benefit, though, of bringing the price down then?
It works,
everywhere?
It works, but if you take it in China, for example, there are provinces in China that have preferential tariffs for renewables, and it's also possible to combine that with the Clean Development Mechanism offering a carbon price. If you put the two together, what happens is dramatic acceleration of deployment. Now, it doesn't always get done in the right way, and there are all sorts of connectivity problems. You know, sometimes the wind farms go up, but the connection with the grid doesn't happen, right? So the plain fact is that if you get the incentives right, capital is deployed quickly. And if you do that, price comes down very fast indeed. So we're seeing tremendous price savings in all of the renewable energy technologies. And they're happening particularly where there are both market opportunities at scale, like China, and where there are public policy incentives, which, again, there are in China.
Thanks, James. Does anybody else want to respond to that question? No? Woman in red top.
One moment. I think it's interesting that I had to wait so long, because my question is, thank you very much, James, for your contribution. My name's Lynn Bender. I'm a psychologist. Given what you've said, which was wonderful, why has this conference not set an example by having more women in amongst the 30 greatest minds and a few less economists?
Well, my response to that, as someone who's been deeply involved in putting the programme together, is I absolutely agree with you, but the response should come from our curator, who we're going to give the last word to from the stage, because there's quite a detailed response, and I leave it to you, Tim. But I would just like to quickly go back to one of the questions that was scrawled here. If we've got time, we've only got about 5 minutes left, and I do want the final word to go to our curator, Tim Flannery. Is a question from Jane Morton, and she has a large exclamation mark, which is great ideas, but with both the major parties in Australia enthralled to the fossil fuel industry, what hope do we have of making the change we need in the short time we have left? And I think it might be worth going, Ian, maybe if you could comment first, and then John, and then if either of the main presenters could respond. So Ian.
I suppose my comment would be that we probably haven't got much hope in the short term, but I guess that's the whole point. We're looking for direction from our politicians, or more precisely, I guess, from the community to force those directions onto the politicians, and then it's simply a matter of time, how aggressive the ultimate schemes that are put in place are, and how the markets variously respond to that, whether it's through carbon, whether it's through renewable energy certificates or renewable energy targets. It's just a question of what ultimately the principles that are put in place.
John? I'd add to that by saying I think there's a real role here for corporate leaders. Although Australia has plenty of fossil fuel companies, it also has plenty of companies who do lots of other things. And I think one of the important turning points in the debate in Australia 5 or 6 years ago was when a number of corporate leaders weighed into it and said, we really need to do something about this greenhouse thing. And I suspect that we need to see a resurgence of corporate leaders, probably realistically from outside of the fossil fuel sectors, but you never know your luck, who come out and say, look, we really do need to deal with this as an economy. We have the highest fossil fuel intensity and the highest greenhouse intensity per GDP per capita of anywhere in the developed world. That's not a great strategic position for us as a country, and we as companies in this economy would like to know that we're part of an economy which is going to be internationally competitive, as carbon price really does come in. And so I think there's a real responsibility for corporate leaders as well as the community, as well as political leaders, to step up to the plate and start applying the pressure again and saying it's time that we moved.
Thanks, John. James and then David, but
the next
quickly.
time you hear someone calling themselves a corporate leader say, we can't manage a carbon price, we'll go bust, or we're going to have to take our company out of the jurisdiction so that we can pollute somewhere else at lower cost, I want someone to say to them, terrific, mate, because it probably will be a mate, a bloke. I'm going to film your farewell speech to your staff and put it on YouTube. And I want to see how you tell your staff that we're not capable of managing a modest challenge to our business a day, that we don't mind continuing to pollute the Australian population because once it's up in the atmosphere it's affecting you, whether you do it from Indonesia or do it from Ballarat, and that we're going to sack the Australian workforce and employ another one because we're not capable of modernising our business. Now that's not business leadership in my view, that's very weak, and it doesn't offer any prospect of the transformation that is actually an exciting one to make, particularly when you have to make it, right? So I think there's some shaming that needs to be done of the type of leadership that gets the most influence at the moment here. And the other thing I would like to bear in mind, a more positive aspect of this, is that these companies in the fossil fuel industry are able to collect very large rents from the status quo. There's been a huge subsidy of public money over many years to create the system from which they can collect those rents. They can afford to build a hedge against the change. And that investment hedge, whether it's done by a corporation or by a nation, allows them to have a better risk-adjusted return for their business and their shareholders over the longer term. So I think both on the shaming front and the opportunity front, we have to put under very close scrutiny those who claim to be leaders in business.
David, can I give you the second final word, and then after that I want to say a few things, and then Tim will come up to the stage and conclude proceedings. I'm sorry that I haven't had time for those questions there. Please get on the web. Please put those questions up there as the terrific questions that we've not managed to take in plenary today, but this should be seen as a stimulus to conversation. But David, if you could just respond to that question.
Yes. I think that the last sentence or two I would leave you all with is, as we think about the transition to a low-carbon economy or to sustainable capitalism, it's very important that we think of this as an opportunity, as innovation and an opportunity to drive economies and to drive growth. If we think about it as a challenge and, oh my goodness, we're worried about entrenched interest and what the status quo has been, we're not going to get there. And there are plenty of examples over time and over history where those who innovate, those who are entrepreneurial will win. And that's really what we're talking about here, is the opportunity and those who will innovate to win.
Thank you very much, David. This is the Deakin Lecture Series, and in preparation I did actually read two biographies of Deakin. And for mine, we've spent 4 hours in this room, some of us, today, and we've been talking about some quite weighty, some quite technical matters, but this is a public lecture series, and just standing up here, I think it's fantastic that you've all been here. You've all been part of the conversation. You can continue to be part of that conversation. And we're not at a university, we're not at a UNFCCC side event, but we're here in a public forum, and I think that's terrific. And there was a quote in Lenore's biography of Deakin that was, I think, quite pertinent to how I feel, having been through the 4 hours today, which is the arguments about politics, religion, literature, science and other great matters, which are the mark of the Victorian age in Britain, were keenly followed in Victoria, Australia. This is in the 1880s. Nowhere else in the colonies at the time could a clever young man have found so much to interest him if he loved books and the discussion of ideas. And I think that that was true. If that was true then, it was certainly true today. Tim, would you like to just come up and close tonight?
Look, in closing, I'd like to address that question asked about the gender balance in this lecture series. Ultimately, as the curator of the lecture series, the buck stops with me, so I'm responsible for the gender balance that you see at the moment. All I can say is that there are many, many excellent women in this field, and if you could see our invitation list, you would see the number of women that we invited to attend. Among them were Connie Hedegaard, the first European Minister for climate change. A number of other, at least a dozen great names. We just were unlucky. Up to the very last moment, we had some women such as Malini Mehra attending, but then one thing and another got in the way and we just didn't achieve what we had hoped. I know Winston Churchill's words do ring in my mind. He says, you know, sometimes it's not good enough to have done your best. Sometimes you have to do what's required. I just have to tell you, frankly, that we tried but failed on this occasion, but it does chagrin me, and I fully accept your comment. Could I now turn to our fantastic panel and our moderator and thank them for an extraordinarily interesting and significant series of insights into a profound problem that we face. I must say I wasn't entirely convinced by the thesis that human instincts will always drive us to take short-term profits. My superannuation fund manager tells me, for example, that I'll receive all of the rewards that I'll ever get for my investments in heaven. So I don't know that I'm up there at all. But what I do clearly see from the comments that we've had this evening is that we are slowly but surely destroying ourselves with our own hands in the current economic paradigm. I see that with our superannuation investment funds today that are investing 20 or 30-year-olds' money in coal-fired power plants. And money is just a promise at the end of the day. It's a promise to deliver, or you can deliver goods or services at some future date. And I do wonder about, I'm certain that on our current trajectory we will simply be incapable of delivering on that promise. So the sort of reforms that are being talked about here are profoundly important to the future of our society. The difficulties we face in implementing them are equally profound, and I'd just like to say briefly about the nature of some of our corporate leaders that James took on. It is the challenge that they face in dealing with something like the carbon pollution reduction scheme is much greater than you may first imagine. To many of them, it is an existential threat, because it involves the admission that the very proud industry that they've been involved in all of their lives, devoted themselves to and taken pride in, is in fact immensely damaging. I saw this same thing play out with the forestry debate, where foresters who were in their own minds custodians of the forests and of all of its glory over years, when they were in their 60s or 70s, having to face the fact that these forests couldn't be utilised in future and had to be protected, and they became the devil incarnate to the environmentalists. It is to many people in the industry an existential threat. We need to understand that empathetically, and we need to deal with it. It is, unfortunately, a reality. But could I just say I wish all of us well, and particularly our panellists well, in their work in future. It is absolutely essential to us. Thank you.